Hello and welcome back, everybody, to Man and Machine. Happy Monday morning, episode 179 here with Dillon and Ben, the co-founders of PeakBot and the co-hosts of today's show. I know there's going to be a few minutes where everybody's joining in here, as always, so we'll get a slow start to the morning here. Ben, let's get some music going. I'm going to do something I wouldn't traditionally do on this show. Ben's like, what is this? What does this mean?
I'm getting nervous.
We have a guy a trader. He's a wheel trader, and he's been around a long time. He's got a big following on socials. We want to partner with him and have people copy his trades on the Tradier platform. And he's live right now. And I want to see if we can get his attention. Now, we're live. We have a show to run.
You're talking. I just reposted his live, actually.
Did you? Okay.
Yeah.
So we're on the same page. I'm really glad. See, we're cooking. We can do multiple things at once. Anyway, so a lot to cover today. We're going to be looking at stocks in real life. Okay. Lyft is the stock. I have to sneeze, Ben.
Do it. Bless you. I love the delay and the sneeze just to mute the mic.
I think I muted it, right?
You did. You got it.
Okay, cool.
See, my mic doesn't. If I hit it, it doesn't mute it.
Well, you know what? I feel like even if I didn't mute it, the technology's there to where it would have eliminated it somehow. You know what I mean? It would have cut it out. But anyway, all right, we got to get music. Doug, how are you? Happy new week. Glad to have you here. Let's get this turned up a little bit. Here we go. All right, so we're going to talk about Lyft, maybe put together a trade idea there, talk about our experiences with the stock in real life. We are going to talk about our hot bot of the week, our partner Terry's Tips. We spoke about this on Friday, but John Lewis, the trader behind automated trading with Terry's Tips, is absolutely crushing it. Up 55% year to date, has turned 40,000 into roughly 65,000. Okay, 60 and change, 62. So had an incredible year, and this isn't the first time he's done this. This is not a surprise to anybody, but we're just letting you know because it should be a surprise to you. So we'll talk about all that and more. Ben, let's get started. What do you think?
Let's get jiggy with it.
Wow. Okay. Let's do it. So, Ben, you'll pull up your screen here.
Yep.
Don't know. I hate when we both click on it at the same time.
We both click it at the same time.
We are synced up. You know, being too much in sync is actually sometimes not productive. As this is a great example of that. Ben, talk to me about Lyft, man. Come on. What's your experiences? Are you a Lyft first kind of guy?
I'm a cheaper option kind of guy. You know, we're gonna have Lyft and we're gonna have Uber in the same area, and it's surge time. If we're in a high traffic time period, I'm gonna check both. You know, I'm not gonna.
Gotta check both.
You gotta check both. However, I usually default to Uber. Although I will say, there are certain areas, and I can't remember off the top of my head because I'm not using ride shares too often, but there are certain areas where Lyft is consistently cheaper.
Oh yeah.
Otherwise, and there's not really ever a time where Uber's ever cheaper than Lyft. No. I don't think I've ever encountered. They're either very, very close in price, or Lyft is significantly cheaper than Uber.
Could not agree more.
Yeah.
And Lyft was the new guy in town, right? Uber was, kind of broke the mold here. Lyft came in, tried to not reinvent the wheel, just say, hey, let's get lower prices. Let's try to get as many drivers in as many areas. I never used Lyft at first because they just did not have, it was the convenience. Yes, you're cheaper, but I'm not waiting 15 minutes if Uber's 2. If Uber's 2 minutes away, or literally I can see it from across the bar, because this was when, early 20s in college and stuff. By the way, Ben, when we were in college, this was very early. Rideshare was still very early.
It was. I don't think we even had it until like senior
We
year
graduated.
of college.
Yeah.
Yeah.
I don't think we had Uber as an option very much.
Yeah.
Especially not in northeastern Pennsylvania. I mean, maybe a little
definitely
yeah.
not there.
No. But I like that.
Your audio's cutting out.
Okay, I'll try. I'll try to get it a little bit better.
There you go. It's better.
I'll just check some settings. But anyway, the user experience on the two apps, in my opinion, incredibly similar. I remember like whenever I get in a ride share, whether it's a Lyft or an Uber, I'm the guy who sits up front and talks to the driver if we have a group of people. Like if somebody has to sit up front, like going out to the bar or whatever, I'm going to sit up front.
You're that guy. You are that guy.
And I'm going to ask, hey, I remember early years, we're like, hey, who pays you better, Uber or Lyft? Like, which one do you? Because they all do all of them, right?
Yes,
like they all have Uber, Lyft, and is there any other big competitor today?
No, but there's like Uber, Lyft, and now there's like they're going to DoorDash at the same time. They're going to do all of these things all at the same time. Because if you're out, you might as well get all of the jobs. Yeah. Like maximize the time that you're out there. Maximize the wear and tear you're putting on your car.
Totally. So look, I got nothing bad to say about Lyft. I'm interested to look at the stock here. I took a brief look at it. I've traded Lyft before. Ben, I think Lyft was on like trend spread for us for a while.
Lyft was on the trend spread, on the wheel watch list. So was Uber, but Lyft was on the watch list for a while there. Yep. Why don't we take a look? Do you have a chart or anything ready?
I do. And funny enough, it's funny when you go into your TradingView account and you see old lines. So I got a line for some reason on Lyft at $13.50.
All right. That must have been your sold put at one point.
Yeah, it looked like a bounce point. So I don't know if that was good or bad for me, depending upon the direction I was going that week. But these are weekly bars. So we'll kind of, here's dailies. All right. We're going to go for, we don't need to zoom out that far. Let's just go. Here's 2025. All right. So we launched here in 25, right around, call it $14 a share. Some consolidation through February. Stock falls March into April. Kind of expected. I'm going to take a look at what the beta on this stock is. Look at that, Ben. You would have never guessed that. Would you? Look at the beta. A perfect, almost a perfect beta score?
Perfectly correlated.
That's kind of wild. I didn't know that. So, I mean, like, if you're not aware of what that means, it typically moves in line with the market pretty damn well.
Almost 1-to-1. Are we gapped up right now?
Well, you're up 40 cents. Yeah, pre-market. So, how are futures looking for the market right now?
Oh, we are pumping today.
Okay, good. I'm happy to hear that.
We are up 65 points since the market close on Friday, and we're pumping today for sure.
All right, good. So, maybe what we do, Ben? Maybe we take advantage of this. Okay, so listen. Now we know beta is 1.0 essentially. Okay, so we can say that what may happen to the market today, we can anticipate that may happen, see similar movement on this stock. We know pre-market it's up 44 cents. There's a varied amount of responsibility we can have here, right? We can like see what we want to do about a trade for today if we wanted, or we can start to macro and zoom out a little bit. By the way, we are not financial advisors and this is not financial advice, but Ben, when I look at this, okay, so let's just go 1 year here. All right, so steady bearish, big jump up. I believe the market, of course, did that, but it looks like earnings probably helped them here, maybe a little bit. And we've been kind of bearish, maybe a little bullish as of the last few days, I guess. But I don't know, Ben. I'm struggling here.
Yeah, I'm trying to think like how are these larger macro events going to impact Lyft as a whole? If we're looking at even just like a weekly play or a monthly play, I'm trying to think like tariffs not really going to impact rideshare earnings for any reason that I could think of. And then like government shutdown, maybe more people are traveling locally than getting on a plane right now. using some rideshare apps. I don't know if that's going to be enough to like really bump up revenue for the
holiday shopping, because I feel like Uber's got to. I mean, these lit rideshares got to see a little more business during the holidays.
Yeah,
right?
you know, don't Uber drivers like shop for you now? Like you could get like things delivered to you, not just food from Uber. Yeah, it's like you can get a blanket from Target if you wanted to. So yeah, maybe that's going to pick up some earnings. So I'm thinking, so then what happens now? Let's say the government reopens this week, right? Are people going to start flying again? And even when people do start flying again, you take an Uber from the airport to your hotel or to your rental car or wherever. So I think based on all those macro factors, I'm going to say we're going to continue to move in an upward direction through the end of the year.
I'm thinking of put credit spread.
Yeah, put credit spread. I kind of like where the most recent consolidation was over the last month. Like get pretty close to the money, maybe at like $20 there. Sell that $20 put.
Okay, let's go look at it. I'll pull it up on
Tradier.
I'll pull it up. Yep. Okay, so chains. Let's go to LYFT. Now, how far out are we feeling, Ben?
Why not just go to the end of the year? Let's do the December 26th expiration. 12/26, above 20. So we're gonna get our sold put here at 20. Ben, it's every 5 cents, by the way. I'm sorry, every 50 cents. Yep.
So how wide do we want to go here? I don't mind if we're gonna go to the end of the year. I don't mind maybe putting a couple $100 out here. You know what I mean?
Yeah. I mean, it's tough to get an accurate price estimate because the bid and ask are so wide at the moment. We would know better when the market opens. But I'm looking at selling the 20, buying the 19. So that's a $1 spread. I'm looking at a mid of a 30-cent credit. That's not bad. 30% return on your cash risk.
And when we look at this,
take profit a little bit early.
So we just got to stay above 20, some real consolidation here. If we zoom out, the price, you know what's funny about, look, Ben, 20's been a real touchy point for them. Look at this. So we've bounced off of this $20 line here a number of times. We're going back years now, but we've definitely, level of both support and resistance at $20 over time. All right, so you know what, Ben? I got to be honest with you. I think I'll put this order out there and just see if maybe it fills at 30 cents. I know it's a little wacky with pricing right now, but I'd be happy with 30 cents on the dollar there.
I agree with Doug's comment, though. It's probably better to price the spread once there's some volume in it.
Yeah, totally agree. It is wide, way too wide.
Gonna have to wait till market opens. I think we could probably do better than 30 cents.
Okay.
And maybe if we moved a little bit closer to the money, took the $21 strike and bought the 20, a little riskier. We're asking for Lyft to really not lose any value before the end of the year. But it could pay off a lot better. For these longer terms, I think I would want to go for like a 1-to-1 risk reward ratio. Like I'd want to get 50 cents on the dollar if we could.
Okay. All right. So this is something to look at. Well, I'm going to make a note for myself once the market opens, kind of check on Lyft, what it's doing, what the volume's looking like, see if we can get an order out there. But okay, cool. You feel good about that?
Yeah, I think so.
All right. Not financial advice. We're not financial advisors. We just like looking at charts and getting an idea about stocks. And that's ours for today. All right, cool. Ben, we're going to talk about Terry's tips, but I also want to see if we got any open positions, which I don't think we had anything over the weekend, right? No King AI over the weekend. Right? Yeah, I don't see anything in my account. So, okay, no. I got a ton of action. I want to see what this looks like. My Visa position that I opened up a couple weeks ago on this show, Ben, I was looking at it, and we'll see what it is. I'm being too greedy. Like I'm leaving money on the table. Like I could probably make $40 on it, but if I just let it go, to expiration January 16th. It's looking good, you know. It's just tough. It's about another $250 I'd be leaving on the table probably, but I don't know.
So you could profit 40 now. You'd be leaving 200
ish.
Yeah, I mean, it's. What do you want to do?
I don't know. I'm not going to make that decision right now. But all right. So Ben, let's talk about Terry's tips. Okay. Let's spend some time on it. You've got Terry's tips live in, I believe, one of your accounts, retirement, whatever it might be. So he's been absolutely crushing it. Okay. And why hadn't we been talking about Terry's tips more? Well, let's be real, and we'll get the link up here on the chat because we're going to show you his results and you guys are going to love it. Here it is. terrystips.peakbot.com. Slower start to the year. At one point, market was giving us some trouble. March into April there, his account was down probably 10% across his 4 portfolios. So we had other strategies at the time that were outperforming that, and that's where our focus was. But boy, has John over at Terry's Tips been on a rip for the second half of this year. I'm going to pull up his cumulative results, all right, which look a little bit something like this. And if you're listening, we're actually putting together a promotion right now. We're going to be working on an offer because with Terry's Tips, he has a very unique way of doing things. And he trades 4 different portfolios, okay, all at $10,000 at the beginning of the year. All right. So when the year turns over, all of these reset back down to a starting balance of $10,000. Okay. He's been doing that every year for quite some time, at the very least, like 7 or 8 years. These are the 4 portfolios. Okay. So we have Boomer's Revenge, Rising Tide, Honey Badger, and Wily Wolf. These each trade a single underlying stock. Boomer's Revenge trades IWM. This one is Disney, QQQ, and Microsoft. Okay. Between the 4 portfolios, you can see here the total return year to date. If you started trading all 4 of them at the beginning of the year with $40,000 in cash available, your return is $62,000 right now. So $22,000 in profits since the beginning of the year. That's a whopping 55.2%. And he was even higher, right? It was a bloodbath this past week. So naturally, a lot of people took a little bit of a beating, but he was up over 60% YTD just this time 2 weeks ago. So, I mean, Ben, let's zoom in here. I mean, Boomer's Revenge, this was the hottest one for most of the year and what got him on this rip, but they've really all started to balance out now. So IWM, Boomer's Revenge portfolio, has made $8,000, returned an 80% return so far this year. And the IWM underlying has only made 9%. Right, Ben? You trade IWM on BenBot. It's not the easiest, stock to trade, right?
I'm certainly not returning 80%.
No. So on fire there. Disney, okay, Rising Tide, the second one here. This is the only one that's down, okay, year to date. It's down 6%. And here's what's beautiful about that. It's the only portfolio down, and we're down $600. You know what I mean? Like when all things considered here, we don't even feel that. That's falling out of our pocket. Honey Badger, 83.9%. So again, this is on 10K portfolios, so the math is easy. That's made $8,300. Wily Wolf trading Microsoft, $6,200. Okay. All 3 of those well outperforming the underlying stock, of course. So just as a reminder, Ben, maybe you can pull up the Terry's Tips user experience in the back end, because I think we're going to clip this and we need to be posting this. We need to be using this. So if you can just pull up, if you don't mind, putting you on the spot, just what the user interface looks like, because this is fully automated, people. Terry's Tips is a proud partner of PeakBot and Tradier. Okay, so this is exclusive to Tradier. All right, he's got an email, a newsletter, a trading newsletter that he's been putting out for 20 years, and he puts his trade ideas in there, and these are all copied from his account directly. So, Ben, why don't you show us how easy this is to use?
Cool. Yeah, I mean, this is one of the more simple interfaces that we've got going on over at PeakBot here. I mean, you can see here just a quick how-to on getting started with the bot. You need to connect your Tradier account, of course, and then you've got these 4 different bots available to you. You got the 4 that we just went over: Boomer's Revenge, Honey Badger, Rising Tide, Wily Wolf. You can edit the amount of units you want to trade. So if I want to 2 units there, I can save that, and my buying power would be updated. Now, again, I was in earlier this year, so I was able to start at the $10,000 beginning portfolio value. That's how much cash I needed. I have not turned it off since then. If you were to start now, you would need whatever value the portfolio is at. But as Dillon mentioned, at the beginning of the new year, the first trading day in January, John will reset his accounts all to $10,000. So each bot will be starting with $10,000. So now's the perfect time to get into the end of the year while John is hot, and then he's going to keep that momentum going into the next year, hopefully. Obviously not a guarantee, right?
Of course,
but
he's done this. He's got a track record.
He's done this. Yeah. Do you have the track?
Yeah.
Let's just go.
I'm pulling it up.
Okay, you're gonna pull up his website.
I'm pulling up our landing page.
Okay. Yeah. Pull up the landing page because we put a chart up there for it. But super easy to get started on Terry's tips.
All right, so here's some info. We're going to zoom in, okay? So over the last 5 years, now this is 2020 to 2024. This is not even including the major year and 55% return for this year. But from 2020 through 2024, a 5-year stretch, 157% portfolio growth over that time. You can see the chart here, okay? He had a fantastic year in 2020, a tough one in 21, 22, recovery. All right, and then another just stellar year this year. So the pricing on this is going to be getting updated for obvious reasons. When you're making people $22,000 completely hands-free with north of a 50% annual return, we're going to make sure we price that appropriately for all parties involved, you, us, and our partner. So we right now, this is priced. If we were to go to the checkout page, it's not $49 a month. We have $149 a month or $199 a month. Okay, so let me get us out of the way here. This is terrystips.peakbot.com. All right, so you can get signed up now. This pricing is going to likely be going up. Don't quote me on that, but that's likely going to be happening here. So if you wanted to trade up to 3 units per portfolio, completely hands-free, exclusively on Tradier, it's only $149 a month. Or you can go to the Pro package where you can 10x these portfolios. And I mean, Ben, this is real cash. If you have the cash to be trading this, this is serious.
That's a great deal. Just to put that in perspective, if you're subscribed to the Pro package at $199 a month, and you were maxing out 10 units per portfolio, that's $400,000. You'd be paying on an annual basis little under $2,400 for the subscription for this. And on a $400,000 account, that account would now be over $600,000. So
just this year alone,
you would have made $200,000 in profit just this year alone, and only paid $2,000 for the subscription fee to do that.
Isn't it terrible that to me, like, it sounds slimy even as we're saying it, but it's not. I mean, these are real.
You've got to keep in mind the smaller accounts, right? If you're trading just 1 unit, like I'm trading, I made over $20,000 on the $149 a month package. So that's, a little under $2,000 for the year.
Great return.
Great return. Can't complain with the return.
No, I hope not. So, all right, fantastic. So terrystips.peakbot.com, likely seeing an update, but we will likely be putting together a promotion where there's going to be a limited number of seats, okay, available at the new year. Okay, probably somewhere in the 30 to 50 seats available at the new pricing that we're going to be launching. So if you're interested in Terry's tips and a hot trader right now and has been over the last 5 years, head on over to terrystips.peakbot.com. Let us know if you have questions. Otherwise, you can also shoot us an email to experience@peakbot.com, and we'll talk to you about Terry's Tips, PeakBot, and any of our partners. Okay, very cool. Let's move.
Thank you, Doug.
on.
Thank you, Doug.
Yes. Thank you, Doug. Thank you, Doug.
Past results are not guarantees of future returns.
100%.
Trading is risky. You will lose money.
Yes. If you don't want to lose money, don't trade. All right, Ben, let's hop into the bot shop here.
All right, let's do it. This is the final week of the Ben bot. So we've covered the Ben bot and all of the components of the Ben bot over the last several weeks, couple of months actually. We've talked about the results. We've talked about entry criteria. We've talked about strike price, stops, take profits, overnight holds. And today we are going to cap it off with a simple variation of this strategy that is actually outperforming the strategy itself. So it's a little bit easier to manage and maintain, a little bit riskier, but we happen to be in a bullish market this year. So this works during a bullish market, whereas the traditional Ben bot strategy, it protects against a bearish market, right? So last week, again, we talked about overnight holds. What does it look like if we did not have any overnight holds, which is typically the goal with the Ben bot? There's pros and cons for that. There's sometimes a possibility to where in the Ben bot we will hold a position overnight, but we will always have a protective put if that is the case. That actually was the case for one of the days last week. Made like $200 on that put that we held overnight, so that was pretty nice. It turned what would have been 2 losing days in a row into a day with a small win and then just a normal losing day. So that was solid. And then finally, this last box here, and this is what we're going to compare, holding overnight with no protection. So I'm going to put the results on screen because I've been trading both of these types of strategies for the last, what was March, 8 months now. Here's what we see. The dark colored results up top, that's one account. And then the lighter colored screenshots, that's the other account. Of course, that's just a spreadsheet where I've been tracking the Ben bot trades. But here is my balance from trading IWM since March 5th this year. Total amount that I've made doing that on the simple strategy is $4,700. Now trading the Ben bot on my Tradier account, you can see the equity curve here. We were crushing it, kind of hit just some chop here, and then we took a big dip last month. Now we're kind of working our way back up. Total amount that we're up since March 5th is $2,800. So about $2,000 less than the simple variation of the strategy. But what we don't see, and I tried to find some examples, and I just kind of couldn't figure out a way to make it look really nice. There are going to be some days where you lose like $1,000 on the simple strategy, right?
Yep.
If you're holding shares overnight and we get a nasty gap down, we don't have any sort of protection on it, you're going to get into a bad position. And it's especially going to suck if that was the first day that you started trading that bot, right? or that strategy manually. And hey, it's going to happen.
Will happen.
It happens. It has to happen to someone. And if you're listening right now and you're thinking that's what would happen to me, you're probably right. Yeah,
that's what happened to me.
Dillon is cursed. Officially.
Mm-hmm.
So whatever's Dillon's trading, do not trade. But these are the up-to-date results for these two types of trades. Dillon, any thoughts on the difference between these two results?
Yes, my thoughts are, if you are call it a smaller account, okay, where if you're trading this strategy with 25K, call it, and that's a lion's share of what you're in trading and investing with, my opinion is you're not going to be able to bear the no protection version, with the drawdowns. Over time, I think it proves that it's a wise strategy and a very profitable one, but it depends upon the individual trader, right? Like what's your goal here? Are you watching this? Do you need this 25K? Is this being invested long term? Right. So it really just depends. I think all options here are good options. It just depends upon like the flavor of the trader and really what they can withstand from a risk standpoint. But what I think we found is over time, all these strategies are sound. We're trading with the market, and 80% of the time it's up and to the right, and we're going to profit if that's happening. It's just, what's it going to look like on the bad days?
Right. Yeah. And I tend myself to be a more conservative trader. So I'm happy with the BenBot results being up 11% since the beginning of March. Like, to me, that's solid.
Fantastic.
Knowing the type of protection that's behind that strategy, and the roll downs, extra premium collection, I'm personally happy with that. But I know other people are shooting for the stars here.
Then go to Terry's tips.
I was just about to say, so you don't want to trade IWM with me. You want to trade it with John over at Terry's Tips, because he is up 80% on IWM this year. That's crazy.
Yeah.
So the way that this works, this simple variation of the BenBot strategy, is you simply, if you're starting out today, right after the market opens, call it before 9:40 a.m. Doesn't really matter what the time is. It does and it doesn't. You're going to want to buy 100 shares of IWM. You're going to want to sell a covered call against that. And then you're just going to let that position go for the entire day. And in the winning case scenario, those shares get called away at the strike price that you sold. That covered call you're going to sell is going to be at the money, rounded up. So there's going to be some gain on shares. You're going to keep that premium. You're going to make your money that way. If price finishes below our sold strike price, you're going to hold on to those shares unprotected overnight. And then tomorrow, you're not going to need to buy 100 shares. You already have them. You're just going to sell another covered call at the money. So it doesn't matter what your strike price was yesterday or what the stock price was yesterday. Today you're taking the stock price, you're going at the money, rounded up again. You're going to collect some premium there. And then you, of course, have a chance of having those shares called away at the end of the day. And that does remove your overnight risk. But again, if you don't get those shares called away, you're holding overnight. If those shares do get called away, then tomorrow you're going to buy the shares back when the market opens and sell that covered call. So every day you're either selling a covered call or you're buying shares and selling a covered call.
Yep. Just want to get this example up on screen here for people, Ben, so they can kind of visualize what's happening here. Bot enters in the morning, as Ben said, before 9:40, buys your shares if you don't already have them, and sells a call at the morning. There it is. So this was a great example of an $88 win back in July, and there's been plenty since. So fantastic. Just want to show that.
Cool.
All right.
That about wraps it up for the BenBot on the bot shop. I think next week, because we got to keep this moving, right? We got to.
Do we go into King AI?
Rolling through our bots. We're going to go through King AI. I need to think about how we're going to do that, because really at the surface level, and if you tuned into the Tradier Summit last week, there was a slide that had a visual of an iceberg on it, right? We would really only talk about the tip of the iceberg part. We wouldn't really get into the AI stuff. One, because I'm not very well versed in explaining all of that. Two, I don't think we want to bring a developer on the show.
I have an idea.
Let's hear it.
Why don't we revisit the wheel? So here's what I'm thinking. We're making adjustments to the wheel, right? It's not happening overnight, but this may even publicly keep us accountable to get the wheel moving and update. Ben, I'm just, we're live. We're doing this. We don't hide anything from our community. Our wheel strategy is fantastic, and it's getting some updates. Maybe, Ben, what we can do is educate on those updates, maybe a revisit of the strategy itself. And by the time we're through those 4 weeks of education, I believe the wheel will be updated and ready to rock with V2. What do you think about that?
Maybe. I'd like to stick with King AI. And just
all right, King AI is fine. Well,
I think it'll be a quick series though, because like I said, we're probably just going to stick with the surface level.
All right, surface level. What the AI is doing. You know what, Ben? We can do a comparison.
Yeah.
Let's do a comparison. King Condor to King AI. Both strategies are still up and available to trade. Both profitable strategies. It's kind of like your example with BenBot, right?
Yeah.
More protection versus less protection, and what's more profitable over time.
Cool.
Okay.
That's the plan.
So we'll do it. Anything else here, Ben? Economic events this week. I know we covered it on Friday, but for anybody who wasn't there on Friday, maybe a quick flyover.
Yeah, let's do it. All right. So economic events coming up this week. We've got nothing much going on today. And I don't know why TradingView has Veterans Day listed as today. It's tomorrow. But nice. We'll stick with it. Tomorrow, not much going on either. Got some ADP data in the morning pre-market. Wednesday, we've got a 10-year note auction. That's going to cause Max's bots to be off. We also have a lot of Fed speeches. There must be some sort of event going on. We'll have to look into that. Makes me nervous for Tuesday going into Wednesday, even though it's not J-Pow speaking. It is a lot of Fed members that are speaking. We'll take a close look into that, but I don't anticipate turning bots off for that. Now, Wednesday into Thursday, we've got CPI data, we got jobs data, we've got data on Thursday, plus a 30-year bond auction. So bots will be off Wednesday going into Thursday. King AI, though, will be on. We are letting AI make the decisions for us. And then Thursday going to Friday, PPI, we'll trade through that. We've got retail sales. There is a fair amount of data, but historically that data hasn't busted up our strategies. And Doug brings up a good point. It looks like the government will reopen at some point this week. And who knows what that means for the market. If any of us knew what that meant for the market, if any of us knew what anything meant for the market, we'd be rich.
We would be. All right, excellent. So a couple things to look out for. Maybe some bumps in the road in the middle of the week. We'll have to dive a little bit deeper there, but excellent. Ben, I think that pretty much covers us for today. Just as a recap, we put together a trade idea with Lyft. We'll see what happens when the market opens. We talked about Terry's tips. We reviewed his results and his site, fully automated copy trading with PeakBot and Tradier, up 55% year to date, absolutely crushing it. And learned about the BenBot, economic events, and we're out. So we will be live again Friday at noon Eastern for our second show, The Automation Station. Join Ben and I for more details about our strategies, results, trader trivia, opportunities to win some free PeakBot, and more. Thank you so much for tuning in. And as always, we'll see you at the peak. Take care, everybody.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.